The headlines are screaming. Zillow, the oracle of American real estate, has just dropped a bombshell. Their 2025 forecast for U.S. home prices has been slashed by a staggering 80%. Picture this. What was once a safe bet on endless appreciation has turned into a landscape of falling prices, flooded markets, and vanishing profits. In 242 cities, the housing market is no longer just cooling, it's starting to freeze. But what's really happening behind the numbers? Who's at risk? Who stands to win? And how can you avoid becoming collateral damage in the great housing correction of 2025? Stay with me, because what you're about to learn could save you tens of thousands, or make you a fortune. Imagine waking up in Austin, Boise, or Tampa and realizing your home, your greatest asset, is losing value by the day. For some, it's déjà vu of 2008. For others, it's a new kind of nightmare. But this isn't just a story of numbers. It's about families, investors, and entire cities standing on the edge of a dramatic shift. Let's break down the shock. Zillow's original forecast called for 2.9% national home price growth in 2025. That's healthy, normal, even boring. But now, just 0.6%, an 80% reduction, and in 242 cities, prices are expected to fall. The epicenter? The Sun Belt and western states, Austin, Boise, Phoenix, Las Vegas, Tampa. These aren't just any cities. They were the darlings of the pandemic-era boom, fueled by frenzied investor activity and a belief that prices could only go up. So, what's driving this seismic shift? Three forces converge: inventory flood. In states like Texas and Florida, housing inventory is surging. Texas up 68%, Florida up 74%. In Miami, active listings have exploded by 82%. In Austin, a jaw-dropping 112%. It's a tidal wave of supply, overwhelming demand and pushing prices down. Affordability crisis. Mortgage rates remain stubbornly high, and buyers are vanishing. In Houston, homes now linger on the market for 42 days, up from just 17 a year ago. In Salt Lake City, the wait has tripled. The result? Sellers are slashing prices, desperate to attract attention. Investor retreat. The speculators who once fueled the boom are now running for the exits. In Florida, institutional purchases have plunged 43%. In Phoenix, investor sales are down 52%. As they sell, they dump even more inventory onto the market, accelerating the decline. But here's the twist. This isn't a national crash, at least not yet. The pain is concentrated, surgical. Of the 242 cities facing declines, 187 are in the South and West. For some, it's a slow leak. For others, it's a gaping wound. The question on everyone's mind, is this the start of something bigger? Let's zoom in. In Austin, prices are projected to drop more than 5%. In Denver and Nashville, 3 to 5%. Even once invincible markets like Seattle and Atlanta are bracing for mild declines. The pattern is clear. The places that soared the highest are now falling the fastest. Flashback to 2006. Certain markets cooled before the broader crash. Today, the speed of Zillow's revision, an 80% cut in just 2 months, echoes those early warning signs. Are we repeating history, or is this a new kind of correction? For homeowners, if you're in one of the 242 affected cities, brace yourself. Equity is evaporating. In Dallas-Fort Worth, 37% of listings have already seen price cuts. In Orlando, it's 41%. Selling now means longer waits, tougher negotiations, and a real risk of selling below what you paid. For buyers, the tables have turned. In Phoenix, sellers are now accepting offers 4.8% below asking, compared to 1.2% above asking at the 2021 peak. Wait just a few months and you could save tens of thousands. In Austin, a projected 7.2% drop on a $500,000 home means a $36,000 discount for those who stay patient. For investors, the buy anything and win era is dead. Flipping in Phoenix, flippers are losing an average of $21,000 per deal. Cash flow is king now, and negative cash flow could be a death sentence. The smart money is shifting to markets with strong economies, population growth, and limited new construction. Think Charlotte, Columbus, Indianapolis. And with foreclosure starts up 34% nationally, distressed property opportunities are rising fast. But here's the million-dollar question. Is this the bottom or just the beginning? Will the correction spread, or will it remain a regional phenomenon? The tension is real, and the stakes couldn't be higher. If you're a buyer, the advice is clear. Be patient. Leverage your newfound negotiating power. Insist on full contingencies: inspection, appraisal, sale. Consider adjustable rate mortgages if you expect rates to fall. If you're a seller, price aggressively. Be ready for a marathon, not a sprint. Offer concessions, closing costs, repairs, even rate buydowns to stand out. For investors, prioritize cash flow over appreciation. Build conservative budgets. Assume zero appreciation. Plan for longer vacancies. Explore alternatives like private lending, real estate debt funds, or multifamily properties where rents are stabilizing. But here's what nobody's telling you. This correction isn't just about numbers, it's about psychology. Zillow's revision has shattered the myth of endless appreciation. The fear of missing out has flipped into the fear of losing everything. And in the attention economy, perception becomes reality. If enough people believe the market is falling, it becomes a self-fulfilling prophecy. So what's the takeaway? Zillow's dramatic forecast revision marks the end of an era. The post-pandemic boom is over. The correction is here, and it's targeting the markets that flew too close to the sun. But with risk comes opportunity. The winners will be those who adapt, who recognize the new rules, who act with discipline, and who refuse to be swept away by panic or greed. As the dust settles, one truth remains. In real estate, as in life, the only constant is change. The next chapter is being written right now, and whether you're a homeowner, a buyer, or an investor, your decisions in the coming months will shape your financial future for years to come. Want to stay ahead of the curve? Hit subscribe, drop your questions in the comments, and let's navigate this wild market together. Because in the world of real estate, knowledge isn't just power, it's profit.